Good morning, traders, and welcome to the weekend update. First thing, we did close out one trade that had about a 12% return, about a $280 return. So that trade was closed out this last week. Now, as it turns out, when I closed this thing out on, I believe it was Thursday, the market was hitting all-time highs. I closed it out. The market almost instantly backed up into this condor. So I could have potentially received a much higher return, but it was kind of a risk-reward sort of thing with the market breaking to new highs, and I went ahead and pulled the plug on this. Had somebody, had I waited a little bit, even an hour, this return possibly could have doubled. But that's what happens when you get right close to expiration on these. The market moves can be big, and they can have a big impact on these trades, both positive and negative. I had no risk of loss to the upside of this trade, but I certainly could have reduced my gain down to $20 or so if the market did in fact continue running up. So based on that, I chose to go ahead and pull the plug on this for an okay gain, not great. But anyhow, so that trade closed out this week. Then these three trades are currently open. This calendar, now this is one that apparently some people did not get the alert when I originally opened this 5 days ago, but the market gave us an opportunity to re-enter because this trade went to where it was about break even or even slightly negative. And anytime a trade that I'm in gets to that position, if I still have the same conviction, or if a trader has the same conviction that I happen to have on the trade, they can reload, add to a trade, etc. You never want to do that when the trade is up. That means you're kind of entering behind the curve, if you will. But when a trade is at break even or even down slightly, and someone can enter that trade for a more favorable price than I did, that's a good time to look at it and consider it. So there was an entry point or a re-entry point where I could have added to this if I wanted. I did not, but I did alert in the community that we were at that point when the market was up here around the 5,900 range. Right now, this trade expires in a little over a week. And my hope is that this week, this will start to decay. Our T0 line will mount up into here somewhere, and I'll be able to go ahead and pull the plug on this for a halfway decent profit. This trade is a broken wing butterfly, much further out, was just entered into this week. And what I'm looking for here is the market to maybe chop back and forth between 5,800 and wherever it wants to go to the upside. And then if the market gets too far out here, gets above, say, 5,900 or so, I will be looking to do a trade that will raise this right wing, meaning that then if the market continues to stay anywhere up in this range, I will be locking in profitability on this trade. And as the market continues to move higher, I can continue to roll this wing higher, again, creating more profitability into this trade, so long as our market stays up and doesn't fall back down here below the 5,700 range, which for the foreseeable future, I think is a likely chain of events, at least up until the election. So as we get closer to the election, we'll have to kind of figure out how that might impact some of these different trades. That's also the reason I'm staying a little bit lighter right now. We're only, 2 weeks away or so from an election that could have a big impact on our market one way or the other. So I don't want to be fully loaded up going into that unless I can get really favorable entries in a trade. By favorable entries, I mean a trade that has a very strong reward to risk ratio. That's going to be what I'm looking for if I were to enter something. And then, of course, we have the FTNT wheel. I've rolled this now 5 times, I believe. And if this continues to decay above this 75 range, this will end up with a profitability of about $2,000. And then I probably go out and sell another put. Actually, I'm selling 2 puts at a time on this and see if I can collect even more. Each time I do this, I am lowering my cost basis for an entry into FTNT. For example, if this decays up to where I'm profitable by about $2,000, again, I'm selling 2 puts each time. That will mean that I will have $1,000 profit in each one of those 2 positions, if you will, those 2 puts, meaning that that's $10 per share. So if the market were to pull back here to, say, $74.99, that's going to get put to me at $74.99, but my actual cost basis will be $64.99 because of all the premium I've taken in each time I've sold those puts. I've put some videos out there on the wheel strategy, so just go and take a look at those if you're a little unsure as to exactly what's going on. Those of you that are members in the community, you will see at the top of this particular circle, there's the entire video on the entry to the wheel strategy and then what I do once I finally get assigned in this wheel strategy. So those of you that are a little unclear on that whole process and are members, go and take a look at that circle in the community. Those of you that are not members of the community, I'll put a link down below as well so you can check that out if that might be of interest to you. So now let's take a look at our markets themselves, the SPX specifically. We can see that we continue to make higher lows and higher highs. Definitely an uptrend and in a channel. You can see last week I had drawn this green line down here, which was kind of showing what I consider to be maybe the support line for this uptrend. A case could be made that this could be a little bit higher, maybe touching up in here and here, but I'm being a little more conservative and using this as my points. Yeah, I've got 3 key points here of times that we've pulled back and then just gone higher from there. And then I actually took this line and said, well, let's create a parallel line to this and put that on the top side. And you can see we're essentially running in a nice uptrending channel. We're a little outside of that channel right now. So that may signal to me a little bit of a pullback. Not a pullback where I would consider us to be bearish. Just a little bit of a pullback would be natural here, possibly to this 5750, maybe even down to 5700. All of that would be perfectly normal. Even down to the top of this bar that I've put here. Any of that would be perfectly normal and expected here over the next week or two. Again, whether we get that level of pullback, I don't know. If we do get that pullback into this 5650 or so range, that would be a key time that I would look at adding a trade into the mix here. Probably yet another broken wing butterfly, because broken wing butterflies act quite well in an uptrending or bullish market, particularly if you enter them when there's a little pullback or when volatility rises a little bit. You can enter those much more favorably priced. And I get into all of that as well in the Deep Dive Butterfly course, which I'll also put a link to down below. In the Deep Dive Butterfly course, I spend about 10 hours going into all the nuts and bolts of when do you enter these? When do you get the most favorable pricing? What are the best times to exit? I go through about 5 or 6 upside adjustment strategies, about 5 or 6 downside adjustment strategies. So everything about butterfly trading, which butterflies are my favorite trade for the most part, everything about butterfly strategy is in that course. So again, I'll put a link to that down below as well. So bottom line is we are still in a very bullish position here in the SPX. And then if we come in and take a look at the Qs, just to kind of get a sense there, the Qs have stalled a little bit, but we can see still definite uptrend, higher lows. And while we haven't technically made a higher high yet, I do believe that could be coming into play. What we are doing here right now is a wedge pattern. We can see that I can essentially, let me come in here and draw some lines on this. I essentially have a pattern looking something like this. So this is what's considered a flag pattern or a wedge pattern. We can see that this wedge is definitely tilting upward, which is a bullish wedge, and approaching the old highs. So this is where we're going to see what's going to happen with the Qs. One of two things. We could get a breakdown out of this wedge, and if we get that breakdown, it's not out of the question that we could come back here, into this 462 area or so. But the more likely scenario in this bullish wedge is that we get a break to the upside, making all new highs. So that's kind of what I'd be looking for in the Qs and in the tech side of the equation. Then we look at the RUT or the Russell. Kind of similar here. We're definitely in an uptrend, but we haven't popped those old recent highs yet. Or we have, but not by any significance. Actually, if we look at this intraday high here, we haven't exceeded that. But we have exceeded old closing highs. Also, bullish. And we'll have to see what happens here. But again, an uptrending wedge. If we draw this bottom line here, we draw a line across the top. That would be essentially a straight line across the top. This is an uptrending wedge or flag pattern as well. More often than not, those resolve to the upside, a breakout to the upside. Now let's look at our VIX, our volatility reading. VIX continues to pull back, going lower. So VIX is a reading of fear in our markets, fear, anxiety, etc. People buying insurance on long-term buy and hold positions is what predominantly drives the VIX. More and more people come in and buy insurance, VIX tends to spike up a little bit. So the VIX just keeps going lower and lower and lower here. And, I would expect it possibly to get back down here into the 16 or so area, but I do expect it to rise back up before election. My expectation is that there will be some questions as we get closer and closer to that election. People will be uncertain as to which way it's going to go. Again, not making any comments on, political statements. It's just an unknown in our market. Anytime you have an unknown in our market, volatility does tend to spike. People start to insure their long-term positions based on their opinions and beliefs of the market or of the event that is surrounding the market. So I do expect that we'll probably see a little increase in volatility. Another reason I'm staying light in positions right now, most options positions, particularly when we're options sellers, are better open when volatility is higher. We get more of a premium on our options that we're selling when volatility is higher. The opposite is true. If I go out and I sell premium right now, I sell options right now at whatever price they are, and volatility goes up. When volatility goes up, those options become more expensive. Now, if I am short those options, a seller of those options, I've already sold them, and then volatility goes up and those become more expensive. That is not good for me. So another reason for kind of staying light right now, if you are a predominant seller of options, this is selling condors, selling put spreads, call spreads, selling butterflies. For all of those reasons right now, if you think volatility might increase going into the election and maybe even shortly after the election, if there's an unclear outcome, all of that could spike volatility. So again, if you are a seller of options, you need to be a little careful in that environment. So with that, I'm going to go ahead and wrap up the weekend update for everyone. Again, there's a couple links down below for people that are interested in the alert service, people that are interested in the deep dive butterfly course. And also, if you like this sort of content, give me a thumbs up, a like, and subscribe. Thanks so much, everyone.